Welcome to Thoughts on the Market. I'm Arunima Sinha from Morgan Stanley's Global and U.S. Economics teams. Today, I'm going to talk about sovereign debt outlooks and elections around the world. It's Wednesday, October 15th at 10 a.m. in New York. Last week, we wrote about the deterioration of sovereign debt and fiscal outlooks. And, right on cue, real life served up a scenario. Elections in Japan and another political upheaval in France drove a reaction in long-end interest rates, with fiscal outlooks becoming part of the political narrative. Though markets have largely stabilized now, the volatility should keep the topic of debt and fiscal outlooks on stage. In Japan, the ruling Liberal Democratic Party, the LDP, elected Sanae Takaichi as its new leader in something of a surprise to markets. Takaichi's election sets the stage for the first female prime minister of Japan since the cabinet system was established in 1885. That outcome is not assured, however, and recent news suggests that the final decision is a few weeks away. The landmark movement in Japanese post-war politics, in some ways, further solidifies the changing tides in the Japanese political economy. Markets have positioned for Takaichi to further the reflation trade in Japan and further support the nominal growth revival. The Japanese curve twist steepened sharply as Tokyo markets reopened, with the long end selling off by 14 basis points amid intensifying fiscal concerns and the unwinding of pre-election flattener positions. Specifically, expectations appear to be aligning for a more activist fiscal agenda. Relief measures against inflation, bolstered investment in economic security and supply chains, and stepped-up commitments to food security. Our strategists expect that sectors poised to benefit will include high-tech exporters, defense and security names, and infrastructure and energy firms, as capital is likely to rotate towards these areas. Though, as our economists caution, the lack of a clear legislative maturity may hamper efforts for outright reorientation of fiscal policy. Meanwhile, we expect the implications for monetary policy to be limited. Our reading is that Takaichi Sanae is not strongly opposed to Bank of Japan Governor Ueda's cautious stance, reducing expectations for near-term hikes. But we also reiterate that a hike late this year remains a possibility, particularly as the yen weakens. Economically, our baseline call has been supported by the election outcome, given we did not expect the BOJ to raise rates in the near future. Indeed, market expectations of an increase in interest rates have been priced out for the next meeting. France is the other economy that saw long-end rates react to political shifts since we published our debt sustainability analysis. PM Lecornu's resignation was far quicker than markets expected, especially given the fact that he was only in office for a matter of weeks. A clear majority in the current parliament remains elusive, pointing to continued gridlock, and ultimately snap elections remain a possibility for the next weeks or months. At the heart of the political uncertainty is division about how to proceed with fiscal consolidation against a moving target of widening deficits. The lack of fiscal consolidation in France has been a topic for many years. Though the ECB provides an implicit backstop against disruptive widening of oat spreads through the TPI, our Europe economists view the activation of TPI as unlikely, as the spread widening has been driven by concerns around France's fiscal sustainability, a factor that is likely seen as reflecting fundamentals. In our rather mechanical projections on debt, we highlighted markets would ultimately determine what is and is not sustainable. These political events are the type of catalyst to watch for. So far, the risks have been contained, but we have a clear message that complacency could become costly at any time. With the deterioration in debt and fiscal fundamentals, we suspect there will be more risks ahead. Thanks for listening. If you enjoy the show, please leave us a review wherever you listen and share thoughts on the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.